Hello, and welcome to this episode of Inside Legal ESG. My name is Pamela Cohn, and I'm pleased to serve as host for this podcast series. Today, our guest is Annabel Nelson, Strategic Advisor in Sustainability and ESG. I was fortunate enough to meet Annabel last month when she was part of the faculty at Legal ESG London. So good to see you again, Annabel, and thank you for agreeing to be a guest on the podcast today.
Thanks very much, Pamela, for inviting me. This is a real pleasure.
So let's start with the very beginning. Tell me about your career and how you came to be working in the ESG sustainability space.
Thanks, Pam. Well, I am a finance person by profession. I'm an accountant, so not a lawyer at all. And I have spent the bulk of my career working in global life insurers with a particular focus. Before I moved across to sustainability, my focus was on balance sheet management, capitalization, financial flexibility. So access to markets, I would say. And I was responsible for financial strength ratings globally, for credit ratings, engaging with investors and external stakeholders. And I sat on the group credit risk committee. So I should say I worked for Prudential PLC, and this is pre the demerger of its UK European operations at the time. So this is when Prudential was truly a global company operating in Southeast Asia, in North America, in UK, Europe, and also with a growing business in sub-Saharan Africa. And my interest in sustainability kind of arose out of my, I guess you call it, natural curiosity. I like to understand how things work and join the dots, if you like. And I know from way back when I did my degree, I studied philosophy, politics, and economics. And I came of age shortly in the early 1990s, shortly after the fall of the Soviet Union. And the thing that that really taught me watching that was change happens because people want it, they're reacting to events, and there's an economic opportunity. So that's what drives behavioral change. There's a need, and then there's an economic, or there's an opportunity to meet that need. And my skill set, being a dot joiner, is in understanding or trying to understand what makes stuff happen. So my move into sustainability was I spent most of my time explaining to our external stakeholders our business strategy and the opportunities of operating these high growth markets with particular demographic trends and economic locus of development shifting eastwards. And I was also explaining, what was driving our business and what was impacting our business. So if you like, I was seeing weather events impacting sales. And then on the flip side, there I was on the credit risk committee looking at asset valuations, and I was seeing impairments or changes in value because of what I would now call environmental and social events. So ones that particularly spring to mind are the Pacific and General Electric filing for bankruptcy, and the Purdue Pharma. So one's environmental, one is social. Were they called that at the time? Definitely not. And around 2015, I was looking at a piece of research by the Swiss Re Institute, which showed the impact of weather events, and particularly Hurricane Sandy from 2012. And it showed losses from weather events by geography, and what was insured and what was uninsured. And that was a real kind of dancing moment for me, because I saw the level of insurance was very, very low, and it was highly skewed to developed markets. So there I was at Prudential, and at the time, Prudential's operations in Southeast Asia are in the most economically vulnerable location on earth to weather-related events, the Pearl River Delta. And we weren't really systematically managing that. So as a job joiner, I thought, here's a massive risk, and wherever there's a risk, there's an opportunity. And then also I'd say that around the back end of the last decade, sort of 16, 17, 18, I live in the southeast of England in a rural area, such as it's possible to be in the southeast of England.
Mhm.
And I was spotting or observing weather changes. They were different from what I remembered as a child. And you start to join the dots, and I was thinking, my goodness, I am literally observing the change in the climate. And that's frightening, actually. So knowing that if you want to make change happen, you have to make it economically attractive. Spotting risks which are unmanaged, the economic opportunity is managing them better. And that's what provoked, that's what precipitated my move into sustainability. And it's been a heck of a journey since.
And it's not going anywhere anytime soon, right? I mean, the work is just exploding. One of the things you worked on recently, which we talked about when we met in London, is the work you did writing a paper. I think it was called Troubled Waters. And it was looking at the impact of water on financial institutions. Tell me about that, and tell me how that was generated and how CDP got involved, et cetera.
So my purpose in writing the paper was to highlight that we focus financial institutions, and actually most people, when we talk about climate, we're really talking about carbon. It's been somewhat reductively simplified to carbon. And that's because carbon emissions are the cause of climate change. And we have a very clear objective from the IPCC to reduce, have a carbon budget to reduce carbon emissions down to net zero by 2050. So that gives us a clear target and clear time frame. But that's not where the impacts of climate change are being felt. And they're manifesting through changes in the water cycle. So literally we are changing weather patterns, where it rains and how much and how intensely. So we are seeing increased incidence and duration of floods and droughts. And then when you couple in the fact our global economy, global supply chains are exporting or resulting in the export of water, embedded water in products and goods and services across the globe, what we are seeing is an acute change in the availability and quality of water. So we are over abstracting water from water stressed areas, and we are exporting it through global supply chains elsewhere. This is a problem because we are running out of water. Now, obviously the planet isn't running out of water. We live on a blue planet, but the availability of water is where the water is located is changing. And I think it's a World Bank produced a stat, which when I read it was truly stark, truly horrifying. Is at the current rate of consumption, our global economy, we're going to have a global shortfall in water of 40% by 2030. So that's that's 5.5 years away. So my motivation in writing the paper was to kind of educate folk. Everybody on an intuitive level, we've all, at school, we all learned about the water cycle when we were 8, 9 years of age. But what we don't necessarily appreciate is, yes, water is important for growing goods, for growing commodities, agricultural commodities. But water is actually, because it's embedded in everything, water is incredibly important for power generation, for construction, for mining. Water is used in cooling. Water is used in pretty much every industrial process, and it's fresh water rather than salt water, because salt water is corrosive. That's where when you see that there is, demand is increasing because all of us are consuming more, and also the population is growing. So there are more people consuming more. That's what's driving the demand. And that's what's causing the risk and the overconsumption. So from a financial perspective, if you're facing a 40% shortfall in global water, available fresh water, that presents a risk. So I wanted to write the paper to explain the problem and then also explain where does the risk really arise? Where is it not being managed effectively enough? So my target was financial institutions because that's the world I know. And I know from my colleagues, I come from an investment house, fund managers in their due diligence are really, when they make their investments, they're really thorough. So water will be, if it's relevant, will be part of their consideration. And I'm sure it's the same if you're in a bank, speaking to colleagues in banks and insurers, on an individual loan or an individual underwriting contract. So it may not be material on a bottom-up individual asset-by-asset basis, but top-down, bearing in mind insurers, banks, asset managers, we are invested in the whole global economy. It's a systemic risk. It will be material, it is material across an entire portfolio or balance sheet basis. And because climate models, climate regulation doesn't yet require us to look at the impacts, they're not being managed. So one of the things, well, my reason for writing the paper is clear. And what I did was pull together the available research that's out there and effectively join the dots, if you like. So back end of last year, about coming up a year ago, the Network for Greening the Financial System, so the central bank network of central banks and supervisors, published a paper on their concept paper on managing nature-related risks, with nature-related financial risks. And there they identified that water risk was a material risk and wasn't being managed. And later in December last year, they actually quantified that risk. And they said it was between 7 and 9% of global GDP at risk. That's an enormous amount. And remember, the shortfall is 2030. So suddenly it's an immediate problem. In fact, and this is where it comes into the legal world, it's a foreseeable material problem. And it's systemic. Can't diversify away from it because it's global supply chains. And it has a financial impact. And the example I would give in my paper, again, is to explain the story, is to show that because water is involved in everything, it does impact the whole economy. And I use the example of semiconductors and the experience I had in 21-22 when Taiwan, which produces about 90% of the more advanced microprocessors, the global supply of microprocessors, had a very severe drought. So that constrained, I didn't know until I researched this, but making semiconductors is incredibly water intensive. It requires super pure water to make the wafers. They had a drought, so they couldn't increase supply. At the same time, 21-22, you will recall, we're in COVID. So there's a big increase in demand for semiconductors. So they can't increase supply, big increase in demand. So the Taiwanese government prioritized access to fresh water to the semiconductor industry because it's important for their economy and also from a geopolitical risk perspective. So other industries were curtailed. At the same time, because they can't increase supply, prices go up for semiconductors, and they are supplied to the industries that are the most value generating, which means certain sectors have a shortfall. So you may recall that there was a reduction in production of automobiles globally. And that impacted not only the supply of new cars, but also it changed the dynamics of the second-hand car market, impacting the phase out or the increased demand of electric vehicles, the attractiveness of investing in new charging points, and on and on and on. So my paper talks about that to highlight this is how the global, because of the globalized supply chains, water can impact the entire economy. So then the next question in the paper is the financial services sector we're good actors. This stuff is difficult. We're generating financial return. That's what we're here to do for our clients and for our capital providers. But equally, we need to generate it in a way that is sustainable for the planet. The problem statement, though, is, as we know, financial accounting metrics don't fully capture the real impacts of the environmental and social sustainability externalities. So we know the effects are real, but they're not yet factored in prices in accounting for. So what I wanted to give the financial sector, and specifically boards, in the absence of a regulatory requirement and in the absence of a clear direction from, as we all collectively build our understanding, hopefully there'll be an increase of demand from clients for more of a focus on this. But I wanted to explain to them, give them a roadmap of practical actions of how they can start to manage this. A, that they need to, and B, how they can do it. But also, I wanted to say, it's not all on the finance sector. So our role is efficient allocation of capital. It's not our role to determine what makes something efficient. That's the role of policy. So the roadmap of practical actions had, I sort of used the levers of change concept. So what's within a financial institution's control that they can control directly? So you can do that in terms of products you like, what you invest in. What can't you control, but what can you influence? So you can do that through engaging with your clients. Perhaps maybe they want to prioritize or think about non-financial factors as well as financial. You can engage with your investees or the people you're providing capital to. And you can also, we have a very large and strong, we have a very powerful voice for advocacy, both collectively and bilaterally. So we can engage with policymakers to make sure that the financially efficient outcome is also the sustainable one. Mm-hmm. And then there are things that we cannot control that will happen, but we need to be prepared and build capability to respond to them. So that was my motivation for writing the paper. And in writing it, I pulled it together. There was no new research, if you like. I'm pulling together existing work. So from the legal world, the excellent opinion that the Commonwealth Climate Law Initiative and Pollination Commission that was released in March this year, which sets out Companies Act, directors' duties under the Companies Act. But also the work of the Institute and Faculty of Actuaries and their Climate Scorpion, looking at how the appropriateness of climate models currently and what needs to change, and various other sources.
So you mentioned earlier on, and I want to touch on this because I see this as one of the legal implications, is, this is a foreseeable risk. It's a known risk. What are the duties and obligations of boards? And you said that part of your paper was to give boards practical tips. What are your thoughts?
So I think the first one is to recognize that climate action is broader than carbon. Mm-hmm. We've had, we're getting on 9 years now, 8.5 years, we've had 196 countries sign up to the Paris Agreement, and yet, the NDCs still put us on a 2.5, 2.7 degree trajectory. So we know, and climate and carbon emissions are marching on a pace. So there will not be effective action if we take this very simplistic approach. Mm-hmm. And if you're a board, as a board member, your role is to ensure that there's you have effective oversight of the climate risk management plans, and that you're managing these risks and you're disclosing these risks. So if you're only looking at one side of the equation, what's causing climate change, and you're not managing the impacts of climate change, which you are affected by, and crucially, you're stewards of your clients' money and they're the ones who are experiencing the financial loss, then it's questionable whether you're fulfilling your director's duties. But more importantly, I feel passionately, about the role of the financial services sector. We're here to provide capital to reduce risk, to enable growth, and provide people, corporates, countries with greater security and enable us to build resilience. We need to equip our firms with the capability. So that means recognize the problem and then start to take the actions to address them. And we can't solve it alone, but we can actually, through using our levers of change, we can actually make quite a considerable, we have quite a considerable source of influence and change that we can make.
And it sounds like you feel about the financial institutions industry the same way I feel about the legal profession. It's like we have a very, very important, influential role to play. We can help affect change in the work we do day in and day out, right? It's not a side project. This is the way we should be doing business for our clients and for ourselves. What do you see as the hottest emerging trends in sustainability right now?
Well, it's actually exactly on that topic. I think that the hot emerging trend is a focus on the how. So we've had, if you like, 9 years to a greater or lesser extent of people recognizing the what and the why, what's causing climate change, why do we need to do stuff. But now we're all doing the hard yards of working out, okay, how do we do it? And I think the big emerging trends will be, how do we affect change? What do we need to have? So some of it is data. So AI will be a real opportunity. Resource allocation, who gets what? And the other hot emerging trend, I think, is it's a relative prioritization of different E, S, and G factors. So sustainability is fabulously complex. Well, I should say sustainability is the outcome. ESG is fabulously complex and it is subjective. And it is it's forward-looking and it has a potentially very long time horizon. And the parties who may be affected by unsustainable practices aren't necessarily the people who are causing them.
That's right.
So you've got a lot of, this is the heart of a just transition, but it's how do you prioritize environmental versus social outcomes and location, where, and cost. So, we've experienced a lot of backlash. Well, there's been a lot of sustainability as a topic has been highly politicized. It's right in the front and center of the culture wars, which I don't think is terribly helpful. The concerns over the cost of living is absolutely legitimate, although I would say that the costs are already being borne now. It's just they're not being borne by the people who are benefiting from the activities which are causing so it's about equity, but that's you get very close to kind of philosophical arguments. I think the hot trend though will be the focus on the how, and sustainability actions is not a zero-sum game. We can do this really well, or we can take a lot of action across sustainability drivers and have really suboptimal outcomes. So I think the how is important, and you see some of that actually in all the discussion around AI and the growth of AI and the footprint of AI, and legitimate and helpfully it's good that people are starting to think about AI is an incredibly important tool. Artificial intelligence is an incredibly important tool that will help us better manage resource allocation, do things more efficiently. But we need to be mindful that there are really potentially very significant adverse consequences if we do it without thinking about how we do it.
Yeah.
So we can have exclusion, we can have a high carbon footprint, I mean, all sorts.
So when I invite you back in 1 year's time as a podcast guest again, what will we be talking about? What will be on the agenda in 1 year's time?
Well, I'm super hopeful that 1 year from now, we will have gone through, I mean, 2024 is the year of elections, you know, half the world are going to ballot box. And that has had a really profound effect on the pace of action this year. Everybody's kind of put the brakes on, or they've been quite quiet. However, the imperatives, 2024 has also been the year of unhelpful, frightening records being broken. So we've seen unprecedented temperatures, floods, droughts, you name it. So next year, we will have had the politics will hopefully be a little, the party politics, I should say, will be a little bit reduced. And we should be seeing the actual outcome, the policy actions. 2025, I would hope, will be a year of action in terms of future prioritization by governments. Where are the policy priorities? So I think, I'm hopeful, I'm ever the optimist. I think a year from now, we will be debating more of the successes and opportunities of how to do this.
I so hope you're right. And because you just mentioned you're an optimist, I would love to have you share with us, given this incredible political environment and all the challenges that society is facing, what gives you hope?
What gives me hope? I think what gives me hope is how incredibly resilient, innovative, and collaborative as a species we are. So when I think back in the early 90s, I sat my degree and I managed to do my degree, probably says more about the university I went to, without doing, the only computer I used in my degree was the Oxford Library Information Service to work out which library contained the book or the paper I wanted. I mean, it's astonishing that I could do PPE and only use one computer in that context.
Mm-hmm.
So not only did the internet wasn't not available, but just basic computing was not available during a political science degree. It's astonishing. When you think about this pace of change in one lifetime and the innovation that's happened, and it's astonishing. We are incredible as a species. We're incredibly resilient. The other thing that gives me tremendous hope is the generations that have come after me,
Mm-hmm.
or are coming after me, because being brutal, I'm a mother. I know that the full force of the natural capital degradation of climate change probably won't be felt in my lifetime where I live in the southeast of England, but it will be by my children, and they know it, and they are much more politically active, and they're much more conscious, frankly, much less selfish than my generation and the boomers behind me ahead. And that gives me huge hope. There's a real impetus. Remember, change happens because people want it. And as the current ruling class becomes, is the millennial generation, that's hugely, it's hugely empowering, it's hugely exciting.
And you said earlier on that change happens because people want it and because there's an economic opportunity. And I think there's both with transitioning to a more just, more equitable, and more sustainable society. It's like the biggest business opportunity of our lifetime, really. And the next generations are going to be the ones that lead that charge. Gives me
Absolutely.
hope too.
I think when you think about the problem statement, so the global economy requires the resources of 1.7 Earths. We only have one Earth. That's why we're in this mess.
Yeah.
So one of the things I feel really passionate about, and again is a source of hope, is, my generation, sustainability is something in addition to business, which is completely wrong. Sustainability is an outcome. Either we will or will not be sustainable. The earth will keep spinning. This is going to be profoundly different. So the opportunity set is we've got to shift from 1.7 Earths to 1 Earth. That change is enormous, huge amounts of risk, but the flip side of risk is opportunity. Mm-hmm. And then the next generation, well, the younger generations are really realizing that, because while you're seeing innovation in resource usage, my children don't buy new clothes. They are devotees of Depop and vintage and other platforms. And we're seeing that across comments.
And I hope we're going to see a lot more of it. And I actually do hope that you will come back in 1 year's time and we'll have this conversation again. Thank you so much for being a guest on Inside Legal ESG.
Thank you ever so much, Pamela. It's been great.